Good morning, traders. It's 8:02 a.m. Chicago time on Thursday, the 7th of January, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Quite a bit of news overnight and market movement, as I'm sure you've already seen. China opens opened yesterday. The Shanghai Composite opened, and within 15 minutes, it was halted after dropping 5%, which is the first circuit breaker. And then as soon as it reopened after the 15-minute break, it fell another 2% to go down 7% for the day to set off the daily loss limit of 7%. The composite's down 11.7%. Again, 11.7% in the first 4 days of trading this year. Chinese yuan keeps getting pegged lower against the dollar. It's at its lowest rate since September 2010. Germany's DAX fell 3.6% on the low, with the Hang Seng following it at 3.1%. These are really big moves, really big losses here. Probabilities of a Fed hike in March have fallen dramatically since the end of 2015. The April hike went from 52% probability to 42% probability. That's been priced into the Fed funds rate, Fed funds futures. Oil hit a 14-year low. WTI low is at 32.10. Let me check that. I believe that's correct. Yeah, 32.10. Crude is down about 3%. The World Bank cut its global growth forecast for 2016 from 3.3% to 2.9%. Fed's lacquer just came out and said that more aggressive rate hikes would be in order if inflation moves rapidly back towards 2%. I don't see how that's likely to happen. Just so you know, the S&P's first circuit breaker is a fair distance away. It's at 1850. 1850.94 in the SPX. So there's quite a bit of room there. U.S. initial jobless claims came in at 277,000 versus 275,000. Continuing claims, 2.23 versus 2.20. Looking at historically at that number on the Wall Street Journal reveals something that's fairly interesting. Let me show you that. Here we go. Oops. Okay, so let me pull that in. I'm sorry. It was up and I lost it. There we go. So looking at the jobless claims here, you can see that you can see on this chart here the average, the 4-week average is at 275,000. Came in this morning. Came in at 277,000. The consensus was 272,000, and the average is displayed here. White's not going to work. The average is displayed in a in that maroon color right here, and the actual claims is the zigzagging number coming down, and you can see how it's been falling quite a bit, but lately it's edging up with the layoffs in the oil sector, which is fairly large. I expect this number to keep going up, so things are looking pretty nasty ahead. You know, with the year starting, just something discrete like this where we are basically bottoming out on our initial claims and starting to rise. Remember, initial claims is representative of the number of people claiming for unemployment. So higher means more people are making claims for unemployment benefits, meaning more people are laid off. Tomorrow is non-farm payrolls for December, and normally by the end of the year, so you have this comes out on a weekly basis. By the end of the year, generally people are quite there's a lot of temporary employment into the holidays and stuff, and from October to December, the number has risen. The unemployment claims have risen, and I think that's really a characteristic of a at least a dip in the economy for now, and we're seeing that in equities. Just fundamental things like that do weigh in. I'm not a fundamental based trader, uh, but generally it's important to kind of keep an eye on those consistent numbers. Crude oil inventories came out very high yesterday, for example, pushing crude lower, things like that. Looking at yesterday, the expectation yesterday was for some responsive buying. The primary hypothesis was for an open auction out of range. Expected it to, let me switch the color back. Expected it to open out of range, trade sideways. I expected a sideways auction. And then I expected it to push to make an attempt for responsive buying back up to about halfway through the gap, and then for it to find its sellers and to start moving down. 74.50 is the first target below, but I also talked about the 64 area down here as the key target below as the primary hypothesis. And yet, again, in true ES fashion, we got almost both hypotheses playing out for the day. Uh, Looking at, I talked quite a bit about neutral yesterday. This was a neutral day right here. This was a neutral day. And then again, yesterday was a neutral day. Neutral that comes in 3 days in a row has a probability, historic probability, on a 1,951 day sample from March of 2008 through September of 2015. Uh, Neutral days coming in 3 days in a row have only occurred 36 times in the sample. They represent a probability of 6.79%. Again, past performance, not indicative of future results. 6.79% that we would have after 2 days. We would have a third day that is neutral, which is what we had yesterday. So the bet that the market would break the initial balance high, remember neutral, just for those who aren't aware, neutral means we broke the first hour's high and the first hour's low, both. And the first hour is important because that is where normally that is where the highest volume of the day occurs, and the most amount of business occurs in the first hour of the day, and that's when the higher time frame participates most heavily in the market normally. We saw something a little bit different on Monday, where the highest volume actually occurred on the close on this big run up. But the initial bounce is a fairly important yardstick. It's a price based yardstick. So is the mid for me, as I explained yesterday. But the bet that this would break higher, pull back, and then push through like it did, it was fairly low, again 6.79%. The probability that today would be again neutral, breaking both the initial balance high and low, is 1.89%. 1.89%. This is what it looks like. So neutral following neutral is very low. 4 neutral days in a row, so you represent it with a 3 here, is 1.89%, and we'll see. We'll look for that today. Expecting today to be a responsive day. We have pushed down into the next high volume node below. Yesterday did end up being neutral, normal, and we had a very normal distribution, making the value high, value low valid for the session, so 89.50 to 79.50. However, with the action overnight, we've moved away from that balance zone and are establishing a new trade or new value below. Again, the profile looks the same as it did the day before. So you can see this profile here looks very similar to this profile. Wider range yesterday, stronger negative delta last night. Just very very meaningful selling, um, with with the low being weak again. Like yesterday, I said the low was weak, and it's weak because it did not taper properly, and it did have a quick pop on the low, but still, it was not an excess low. It was not a strong low. So if we pull it up here, look at it, you can see that quite a bit of volume went off all the way down into the low. It did have this pop, and as I explained yesterday, the expectation was for it to take out the low. It ended up taking out the IB high before going down, taking out the IB low and the overnight session low. Remember, the statistic for the overnight low is somewhere around 97% probability that the day session would take out the Globex high or low. And yesterday, despite the very wide range, I'm sure a lot of people doubted that the overnight stat would not work, and it's very possible that it wouldn't. But it ended up taking out the overnight low right here. There's the overnight low, and there's the lower low taking out the stat. Here's the overnight low now, 1931. The low is weak again, very strong or very abrupt taper again. So looking for that to be broken at some point in the session. But interestingly, the overall attitude of the market. So let's shift this over. Too much. Okay, so the overall attitude of the market is it has pushed down into the next distribution. So we have a gap down and a push back up, and we are trading this next high volume distribution right here, next high volume node over here. I believe we're likely to be stuck down here today. I don't think it doesn't look like we're likely to have precipitous selling down. So it's interesting. The overnight low again is a lot lower. The overnight low is at 1931, currently trading 1948. We're 17 points higher. The expectation is that this is likely to balance out today. So we'll see how it plays out in the open. Again, we are back where we were in September. Is this a disaster? Is it terrible? Is it the end of this big rally? It really isn't. We're just having a pullback. As you can see in this big trend, we're just having a pullback. We did make a lower low in this crowd here. We never took out the high. We pulled back. We made a lower low and are pushing lower. It's setting up a bearish formation, but we are not in a panic yet. I know China is, but the U.S. market's still representing a fair amount of strength. So overall, I'm looking for the market to open. The primary hypothesis, it'll likely open. Again, open auction out of range. I expect it to test the 1940, potentially fall into the 1931, but I expect today to be mostly responsive. I expect the market, there's a higher probability that the market is likely to be responsive today and make an attempt higher, as opposed to opening, failing to go higher, getting responsive in the morning, and then falling through and then continuing lower. The expectation is that the market is likely to rest today. That's the primary hypothesis. The second hypothesis is the exact opposite. We open and chop, we try higher, find our sellers like we did yesterday, push lower, and continue to push lower into that lower node at 1924. That's the secondary hypothesis. The market's been playing both hypotheses, as I already said. So that's how things are shaping up. A quick look at crude oil. I have to actually bring in more data to see what's below us in crude oil. I mean, it's in really bad shape. This chart goes way back, and it's at new all-time lows on this chart. So at 32.10. So there's not much I can work with crude oil here. It's experienced a small bounce. But it's in pretty bad shape. I did expect crude the way the crude was setting up. Crude was looking like it would have a corrective move up once it made new lows. It looked like it was going to set up this way, but geopolitical news and so on is causing it to be quite iffy to be in that product. So not much to comment on crude. We're in new territory, new low territory for now, until I can pull data in and see where the auction was at this point in the past. I'll leave you with that. I know there's a lot to cover. I'll leave you with that. Hopefully you are paying attention to your risk. It's, you know, when volatility picks up, it's a beautiful thing. It creates opportunity for gain, but of course it creates even more opportunity for loss as people get caught into the action and feel like they have to act. The biggest thing you have to resist as a trader when volatility picks up and the market starts selling off is the fear of missing out. People start doing silly things because they don't want to hear that somebody jumped on a huge move down and made 30 points on a 10 lot and is retiring this year or whatever. Don't get caught up in that. Mind your risk. Let the market set up. I'm not going to trade on the open. I don't trade on the open. I need to see what the market wants and who's participating in it. The action is inviting higher time frame players, bigger players into the game, and that's a good thing, but I'm not going to subject myself to getting run over. So, forget about the missing out on moves. Just pick your spots. Mind your risk. You may have to expand your risk a little bit if you're not able to cut down on size. If you're trading stocks, you can get down on size and keep your risk the same. But you may have to expand your risk a little bit to benefit from the moves because using a 6-tick stop in this environment is fairly futile in my opinion. So just take it easy, chill out, relax, and let the market come to you. The goal, remember, we're like surfers. The goal is not to go and chase every single wave, trying to ride it to shore, trying to surf it. We are floating around and waiting for a good wave. We try to anticipate what's going to happen based on what just happened, but try to wait for the wave to come to you and try to comfortably ride it without micromanaging your trade and without too much fear. That's our goal. I know that sounds really odd, but that's really what it's about. Trying to actively create a wave in an ocean of market is not the way to go. Good luck today, and I'll catch you tomorrow. Take care.